look at 2-3 parameters which I feel is a very medium term parameters. One is a product mix, which is an entry level car sales is higher. As we all know, during the pandemic, people has some constraint on the budget. So going forward, as the situation normalizes and industry will move to double-digit growth, people will again go back to premium products. That would also help on the margins front. Secondly, as you pointed out rightly, only raw material is the biggest issue. And if you look back to 2008, whenever any such recession or such a sharp slowdown happens and recovery starts, initial impact is a very sharp jump in the commodity prices, but that also stabilizes after 1 or 2 quarters and that comes down. And by that time, company also gain the pricing power to pass on this cost escalation. So we believe that company already took some price hike that will happen again in the coming quarters. So maybe after 1 or 2 quarters, complete cost escalation will be passed on to the end customer. So that issue will be also addressed by the company. And third thing is that as earlier communicated, double-digit growth is expected for FY20 as well as FY23 also. So there is a probability the margin improvement street will start upgrading their earnings for FY23 and 23 earnings stock may not look very expensive. So its valuation will continue and stock will continue to trade at higher, maybe near term some pressure maybe there for the stock, but we remain positive. Structural basis companies seem to be very strong.
Okay, all right. So that's 2 analysts out of 3 telling us that despite the slight bit of margin hit, the structural uptrend for Maruti will continue. There is double-digit growth that we're seeing in volumes. And even if you look at the revenue trend, I think the graph will come up for you in a bit. At 23,458 crores, this is the highest revenue that the company is seeing at least in the last 8 quarters. So an 8-quarter trend is what we have. On an average, the company has done revenues between 19 and 20,000 crores in the last 8 quarters. And now the revenues have risen to 23,458 crores. So definitely the company is selling more products. It's just that the product mix has weakened. So in this post-COVID era, people prefer to buy perhaps, smaller entry-level cars. So the product mix has weakened a bit. Prakash Diwan, quick thoughts from your end too. Would you agree with the other 2 analysts that despite the slight weakness in margins, the stock is a buy and the earnings could, sort of pick up as the consumption trend continues?
So Sonia, since a lot has been discussed on the metrics on the earnings, I just want to point out the biggest worry is not the cost escalation. That would actually they'll be able to pass it on, and as volumes grow, it becomes much easier to do that. The worry is this product mix. They have not had a single, and it's not that the competition is not growing. You look at how the Tata vehicles are selling on the premium side. You look at how the Kia has taken up share. You see the Cretas of the world getting into that premium side. I think after the Ciaz and the Brezza, they've not had a significant product launch to plug the gap. My hopes are on the Jimny middle of this year. If they launch that could probably do what the Swift did for them a few years back in terms of reviving their realization and the entire margin trajectory. So we'll wait for that. If that happens, the company definitely is on its way to getting re-rated upwards. But till then, I think it will probably be sideways on the stock as well, consolidate, and people will want to see the actual improvement in the margin profile for the next 2 quarters.
Okay, all right, gentlemen, thank you so much for joining us. Sonia, thank you.